Hi traders, Anthony here. This is a simple, easy to understand explanation of the average true range and how we can use it in our trading to help us plan our trades. This is the average true range we have down here at the bottom of the chart. You can do a search in indicators ATR or average true range. Introduce it to the chart. It's got a number over here on the left, as you can see as I'm scrolling through these candles. The range, the average true range, changes accordingly. Alright, we can see the average true range rising here and descending, ascending, descending, average true range. What the average true range does is it measures the volatility in the market. See this section of the chart here. Notice the volatility is extreme compared to, say, the volatility in this trend here. With the increased volatility, we see the average true range ascending, and when the volatility drops off, we see the average true range descending. So it's a measure of volatility. The volatility is the movement between the high and the low of a candle. So let's have a look at this candle here. We have the high and the low. The distance between the high and the low is the range of the candle, and it's measured in pips. The previous candle range is measured in pips. This one's a little bit less. Okay, so we can see the variation in the range of each candle. So what the average true range does, typically it will look back 14 candles and it's going to average out the range, the distance between the high and the low of each candle. It'll average it out and it'll give you a figure. So if I mouse over this candle here, you can see down the bottom left the average true range is 47.4. The average true range, so what it's doing, it's looking back 14 candles and averaging out the range. Okay, so it gives you, or it measures the market volatility. It's telling you the condition of the market, not the direction of the market. A rising ATR means the volatility is increasing, and descending ATR, the volatility in the market is decreasing. So it's important to understand that this is not the direction of the market. It's a measure of volatility. So we can use the average true range in a number of ways. It can help us define our target and stop loss levels. So let's say, for example, you arrived here, we had this move and you saw this breakout here. Okay, we have this break above the range and the market traded back down here, and you've decided that this is an ideal entry at this point here, at this level. Alright, so the market's trading right here and you're going to plan your trade using the average true range. So we mouse over this candle, we can see the average true range is 55.7. Okay, so this might be your trading plan. Entry on this pullback here. The stop loss is 1.5 times the ATR. Well, if we mouse over this candle, the ATR is 55.7. So 1.5 times the average true range in this case then is 83.55. So we can pull our long position tool down here, 81, 82, 83.3, 83.4, just slightly short of 83.55. So this is around about, give or take a pip, 1.5 times the average true range, being 83.55. So we'll go 84.4. Our first target is going to be 1 times the average true range. So we know that the average true range is 55.7. So 55.2, 0.8. Alright, well that's 55.8. It's slightly more. So we can measure that from here to here. 55.7 is the average true range. So that'll be target 1. And we might look at taking 80% of our position at target 1. Target 2, we're looking at 2 times the average true range. We'll just measure another 55.7 above that. And we have target 2. And then target 3. And we can just grab our parallel tool here. We know that that's our 1 times the ATR. So 3 times the ATR bring us to this level here. So there's our third target, which gives us slightly short of a 1 to 2 risk reward ratio. We're risking 1 to gain 2 stop loss. So what we can do then is we can trail our price. So once the market moves, let's say to our first target, well, we can trail the stop loss and keep it 1.5 times the ATR under the price if you want to, or we can reduce that and bring the stop loss to 1 times the ATR under the price. What we've done with our indicators is, if we go over to this chart here, I'll open up the hourly chart, as we've set up the average true range down here at the bottom of the chart so we can see what the ATR value is at the current price level. It's quite convenient, so we don't have to have the ATR indicator line on the chart. And the other thing we have with our indicators here is these levels that you see are the variations of the average true range indicator. So you can see our cloud. Let's just say that you decided to enter a short based off this breakout. Your stop loss could start above the cloud here. These are variations of the ATR, average true range. You can follow the price down using these dots as the price is moving, and once you gain a little bit of distance, trades going in your favor, you can tighten up your stop loss by moving it down and following these levels here. So you don't have to be concerned about where to place the stop loss. It's all worked out. All the heavy lifting's done within the indicators here. So these levels are key levels based on average true range, variations of that. And generally our strategy is to look for taking profit, or TP1, at 1 times the average true range. You don't need to be concerned about having to calculate stop loss levels, because we have all that information available, and then we just basically follow these dots. So if this is entry here, we'll work out what the average true range, it might be 41. Simply come over to our ruler here. If that's entry, then we can pull the ruler down and measure 405. So that's going to be your T1 right here, 1 times the ATR value there on this time frame. With our strategy, we generally don't work off other targets. You can do if you want to, but we just simply trail the price following the dots, these dots here. So with that, I'll wrap up the video. Check the links below if you'd like to gain access to the to our indicators and our private Telegram group. The links below the video. That concludes my explanation of the average true range.